Welcome to the daily money market. Right now, we want to check in terms of where the gold is sitting, and we can carry on with the stories and be able to come back and analyze. The gold price roses to the new all-time high of 2,589 per ounce on Monday, boosted by the weakening of the dollar. A gold rally was headed on a Tuesday, however, and its price dropping to 2,560 per ounce as the dollar gaining strength in gold price rising again. Resisting may be countered near the psychological level of 2,600 per ounce, while if gold price decline, the support may be accounted nearby 2,500. So that's the price of gold. If I see right now it's sitting at 2,569, and we're gonna check a higher possibility where the gold is gonna go. Actually, it went to all-time high, so that's what it is actually not shaking the market. NAS, US 30, Dow Jones again back to where the price it was. We've been talking about it that it was low, but we wanted to get back to 4,164. It's there now. It was on 4,186. Now it's sitting on 4,164. So sitting comfortably above when it comes to Dow Jones. NAS 100. Again, NAS 100, it hasn't catched the highest position that we wanted. Since last week, what we analyzed that the market will go all the way to 19,000. All right, man. When it comes to last week, it's been a lot of news that actually come last week. There was a consumer price index, CPI, that actually pop up, and a lot of people they were actually anticipating on those consumer price index. Let me just get the data of consumer price index. Maybe it's gonna give us a little bit of an idea where the market we think. The US consumer price index it actually rises for 0.3% month to month. Estimated was 0.4%. So not that much in terms of positivity. But after that consumer price index, the other news that we're actually waiting to actually pop up, it should be the retail sales industry, the retail sales report. So retail sales give us the idea of how many people are participating in terms of buying, and we realize that the numbers comes yesterday in terms of the retail sales. And guess what? The industry that is actually making money is the industry of internet. So people are participating or buying more data than actually food, than retail industry that deals with the fruits. So those are what is happening currently, and people are choosing to spend their money on the internet than to buying some other product. So when it comes to retail sales, rises at 0.1% month to month. The estimated was negative 0.2%. Again, a gas rises at 0.2% month to month, estimated at estimated was plus 0.3%. So all these numbers that come yesterday from retail sales doesn't really show anything in terms of the Federal Reserve. They're going to cut the interest rate, whether with the 25 basis points or whether with the 50 basis points. Now, we need also to understand the difference that will make if the Federal Reserve will cut 25 basis points or if they will cut 50 basis points. All right, the other story that actually popped up again this week, it's a European Central Bank again. They're also cutting the interest rate. So what we notice now, Madam Jessie Lagarde have cut the interest rate of 25 basis points. So from Europe, so far from European banks, so far they are actually sitting at the 50 basis points, because 2 months ago they cut from 25 basis points. Then the other month, the following month, I think it was June, 25 basis points. July, they keep it on a pause. August, they keep it on a pause. September, they are actually, cutting it at 25 basis points. So they are sitting at 50 basis points. I pretty much believe that by the end of the year, they will get to the target of 100 basis points that are being cut. But that's a different to a story of United States. The story of the Federal Reserve of United States is that they haven't been cut the whole entire 5 years up to now, and today is the first over 5 years, in terms of cutting the interest rate. Now they can see. And Europe, already European Central Bank, they're on 50 basis points. Are they going to cut at the 25 basis points, or they're going to jump to 50 basis points to speed up things? Now, here's the difference that I was talking about. If they're going to cut with the 25 basis points, that means the whole economic cycle has been landed on a soft landing. It hasn't been a lot of crisis in terms of, the market goes sideways or in terms of getting into recessions, right? Has landed on a soft landing. If they're going to cut with a 50 basis points, that means the market economy has landed in a hard landing. And a hard landing, it means there's a higher possibility, or there were possibility of we could have gone to economic crisis, or we could have gone in a financial crisis. That's what actually it means between 50 and basis. Again, what it means also in actual numbers, it means it's 0.50% that will be deducted from all interest, or it will be 0.25% that will be deducted from all interest between those two. So are we taking 0.25, or they're going to choose 0.50 in terms of cut? Now, here's another crazy story when it comes to cutting of this interest rate. Remember, immediately you reduce the interest in terms of the buying power, there's certain industries that they're going to get affected. So for example, in the bond industry, 10-year bond, 20-year bond, 30-year bond, they're going to get really hit hard because of the cut of the interest rate. Because of now, they cannot be able to sell their bond at a higher price to make a good profit. The interest has been reduced. They're going to have to reduce also the price of selling those bonds. Again, transferred that to the stock market, where the price of the stocks itself as well, it has to be declining depending on the interest rate. So we're going to see a little bit of fluctuation when it comes to market itself, when it comes to gold, when it comes to USDT, and when it comes to Nasdaq. That's what we want to go through and actually, analyze that. The other thing that comes last week, it was Apple iPhone 16 dropped, and we actually, realized that the iPhone 16 sales has been actually, declining this week. So I saw that story and that article. Again, Spotify upgrade at Red Bond in Atlanta. So we saw the price of the stock price of Spotify jumping on to actually 2.30% growth. 3.13% growth to $2.30 per share price. Again, Apple is more incremental than a revolutionary. We maintain our caution and neutral views on Apple. The reason why the analysts, they're saying that it's more incremental than the usual is because of after 2 weeks, the iPhone 16 has been released. People have been doing the research to those who have iPhone 16. What's the difference between this iPhone 16 and the other ones? So people that bought it, they're saying there's no much revolutionary, feeds on that iPhone 16. It's actually no more the incremental than the revolutionary. So there's not much that changes to say that this is a different type of phone, because we're talking about introducing of AI on those phones, introducing on ChatGPT on those iPhone 16. So people, they don't see that much change, that much revolutionary when it comes to iPhone 16. That's why we saw a little bit of drop when it comes to iPhone 16. Again, when it comes to Europe productive show falls 18% of potential GDP in 2023, equivalent to more than 3 trillion pounds, on a track to reach almost 40% by 2050. So again, we're seeing the shortfall of GDP when it comes to Europe. But the big one, it's a Federal Reserve interest rate cut. The bond traders favors 50 basis FEDS cut. Okay, so as we talk about the bond traders, they're favoring the 50 basis points than the 25 basis points. Okay, European stock muted ahead of Federal Reserve. So all the stocks right now, they're muted ahead of the Federal Reserve. What we're gonna do now is to jump into the market and try to analyze the chart itself.
In July, and now they're going now. The ECB has gone, so we're just a little bit out of line with each other. It shouldn't make an enormous difference. Again, if you manage the expectations about the path, and if everybody's doing so, we know the ECB is going again this year, or we think we do. We think we know the Bank of England's going this year. We just don't think this is the month that's going to happen. As long as you can, as policymakers guide the market, I think that's okay. I don't think the big danger is you accelerate the fall in the dollar. I think at this point, only because it's come down quite quickly, quite a long way already, that I think what you don't want to do, in fact, is trigger just disorderly moves. So, yeah, central banks can't always be in sync, all moving together on the same month. That would seem odd, but they do need to get the focus more on the medium-term path rather than the minutiae of each meeting. We're all in easing mode. The global economy has slowed down. Inflation is coming down, and we're not going to do it quite at the same pace.